In this video, I'm going to discuss how to approach trading as a beginner. Because I feel that here in YouTube and also in other social media as Twitter and other platforms, the basis of trading derivatives in crypto, of trading in general in crypto, but most of it in derivatives, are not being well set. So before jumping into the video, I want to say that this is not investment advice by any means, and you should not take what I'm saying in this video as an investment advice. So please consider that before listening to this video or watching this video. Also, I'm going to encourage you to go to my Twitter on trading@soldier and follow me for daily updates when I post my views on the market, my trades, and also my setups. And you can go to my website trading-soldier.com when you can find trading strategies. Because this video, I'm not going to discuss trading strategies. I'm going to discuss how to approach trading as a beginner and not to lose money on trading as a beginner. So if you want a trading strategy to implement technical analysis or other type of analysis in the charts, you can go to my website or also to my YouTube channel where you are watching this video and see all the trading strategies I prepare for you and I explain for you. So let's get into the video. So in this video, as I said, we are going to discuss how to approach trading as a beginner. We are going to start with the thesis or the basis that 99% of the people that trades or do trading lose money. Only 1% or 2% maybe earn money from trading, win money trading, make cash, make bank trading. The other 99% of the people is losing money, and that's a fact that these are statistics that you can find online on studies that are being done, that the most of the people that trades lose money. And I think that this is a very common issue because the 99% of the people that trades, they follow the same influencers, they follow the same trading strategies, they follow the same news sources, they follow the same road to achieve what they call financial freedom or the success on trading. So I think this basis is flawed, is very flawed, is rigged, let's say, because the sources that you are going to listen, they are going to give you mainstream information that is not going to serve you and is going to harm you or confuse you. And also the influencers, the big influencers, the people with hundreds or millions of thousands of subscribers, are going to not give you the accurate information that maybe they will have, but they are not interested in give you, because if they give you the information that they know, you will be the perfect trader, and this is you will not watch his videos anymore. So they don't have an interest for you to succeed in this world of trading. So let's say that once I have to say that once we know that 99% of the people follow the same rules, the same ways, and they are screwed by their market, they lose money in the market, we can put a solution to this. And for me, one solution is the capital management. As traders, we need to think about our capital as our fuel. We have our fuel, that is our motor or engine runs with this fuel. If we run out of fuel, we are going to stop trading, because if we lose our capital because of bad decisions, bad trades, bad risk management, we are going to stop trading, because the capital is our fuel. If we lose our fuel, we are going to stop the engine. So to talk about how you should, or how I should approach trading as a beginner, we are going to divide our capital. We are going to make here an example, and we are going to divide our capital. So let's say we have an account of $10,000, okay, $10,000 here, is our 100% of capital. Okay. So $10,000 is our 100% of capital. Okay. So we have $10,000 that our grandpa or dad that has died has give you, and you want to start trading cryptocurrencies and not getting wrecked or losing all your $10,000 in this not shady, but crazy market. So how you should approach it to preserve your capital and to win, because you need to make probabilities or stakes in your favor. So I will first divide this in two sections. Section 1 and section 2. Okay? Section 1 will be my speculative portfolio. So will be speculative portfolio. And this will be trading perpetuals and futures, or so-called derivatives. And for you to make it clear, this is all trading that is require leverage. Okay, so this will be our speculative portfolio. Okay, let's make it this way. So, okay, speculative portfolio. Maybe I can make it little. Okay, speculative portfolio. Trading perpetuals and futures, derivatives with leverage. The second half of our portfolio will be spot trading. That will be, trading on spot, swing trading, positions, and also what we call hodl. Okay, in a cold wallet. Okay, let's make it much appealing here, much little. Okay. So these are our two main, let's say, focuses when we are trading crypto. So in this speculative portfolio, we are going to let's say allocate 10% of our total capital. That this will be $1,000. Okay. In the spot portfolio, we are going to allocate over 90% of our total capital, and this will equal to $9,000. Okay. So to begin with, in this speculative portfolio, we are going to use leverage. So we are going to use leverage, and I will recommend to use 5x to begin with. Once we are more experienced with 5x, I'm going to switch up to 10x, and then maybe I will switch to 15x or 20x. Okay? This way we are going to let's say increase the difficulty of our trading, impair or by the hand of our experience. So we are going to use leverage first 5x, and once we are winning trades, we are going to switch to 10x. Once we see that we are still winning trades here, we are going to switch to 15x, and if we see that here we are winning trades, we are going to switch to 20x. This strategy in general is also good because if you deposit all your money in an exchange or in a protocol or in a trading platform, you are also experiencing, or you may be exposed to risk of exposure to one platform. For example, if I in spot trading deposit all my money on Binance, this is very, let's say you are exposed so much to Binance. So if Binance goes bankrupt, or Binance have a problem, or your Binance account gets hacked, you may lose all your money. Also, in speculative portfolio, you deposit $1,000 in an exchange that allows you to leverage your $1,000. So let's say that if I have $1,000, I will leverage that to $5,000. So in total, this is not what we are going to do, but you can leverage 1,000 to 5,000. So this is why you don't need a lot of capital to make money when trading with leverage. So following this let's say this roadmap that I'm explaining to you here, the operations, the positions that we are going to take will be with a maximum of a 2% to 7%, depending on the leverage of the position. Two to 7% stop loss, depending on the leverage of the position. So the maximum drawdown that we are going to take into account is 2 to 7%. Okay, so if my stop loss is going to hit or get triggered, we are going to lose maximum 2 to 7% based on the position. I'm not a huge advocate to put stop loss based on percentage. I will put the stop loss based on the price action and also what the chart is telling me. So these are indicative, but the maximum drawdown we are going to take are 2 to 7%. Let's say 7% if we are 5x, maybe 5% if we are 10x, 4% if we are 15x, and 2% if we are 20x, because increasing the leverage will increase your losses. So the more the leverage, the less percentage you will be able to tolerate in your stop loss. Okay, and we are also only risking 5% of our total portfolio of our total capital. So if we have $1,000, this is for operation, for position. Okay, so I am going to open a trade, for example on BTC USDT, and I will only risk 5%. If I am leveraged 20x of that 5%, I will only lose 10% by 20. Okay, 2% by 20. So losses, you can also only lose 20% of that 5%. This way is very unlikely you get your whole account wrecked or destroyed, okay, liquidated, okay, because you will need a lot of losing trades to get liquidated, okay. So this will, let's say, preserve your fuel, as I said before, in the market, and you will be able to trade for much longer. You will be able to trade more time, and you will be able to be more experienced at trading. Okay, the whole point of this strategy is to begin with low capital. As you see, is very low capital of our initial, let's say, capital that we have available. So also, if with this little capital, with this less capital that we are going to invest into derivatives or leverage trading, we are going to leverage it so we can win more and also learn more. Okay, because I think that if you don't start small, so you start small with little money and with little profits and also little losses, a little of losses and little of wins, you will see if trading is for you, because maybe you are a too emotional person and you are not able to manage your emotions. 2, you are going to see if trading is for you because it likes you, you like trading, you enjoy trading, and you are also able to tolerate the stress and the let's say the hours, the experience that needs and requires to be a successful trader. And also you will acquire more experience, because if you do a lot of little operations, you should treat these operations as real operations that you are trading with a lot of capital, but you are risking little capital, very little capital. So when you lose, it will sting because you will lose money. This is not paper trading, so I discourage you by any means to paper trade. This is not real. You will not have the the emotions, let's say, and the rush. You will not feel the greed or the pain when your stop loss is triggered. You will feel pain when your position is on profits or is going to near to the take profit. You will feel the greed. So you need to take and feel these emotions in your own skin. You need to feel the pain and you need to feel the greed. So investing a little money is, let's say, a little building that we are going to build, as I said, to test. We have to put this as a laboratory when we are testing our trading strategies, short term, because this is short term, not swing trading. Swing trading is in the spot trading bucket, let's say, but we are going to experience those emotions. We are going to learn to manage those emotions. We are going to learn how to trade price action, how to trade based on trading strategies, as you can learn here in my blog or in my YouTube channel or in Rumble, where I post these strategies. Also, I begin posting these videos with my strategies on Twitter also. So this is, let's say, as a test field. We are going to use this as a test field, as a beginners, to be comfortable when trading, be comfortable with our risk, we'll be comfortable and confident also with our strategy, with our trading strategy, and learning how to trade, where to position our stop loss, where to position our entry point, and where to position our take profit levels, and also how to read order blocks, VWAPs, VPVRs, volume profiles, how to read a lot of indicators that are going to help you. But this is not the topic of this video, as I said. This is just how I think every beginner should begin trading to not get wrecked in the market. But in the other hand, we have the spot trading that we are going to swing trade positions. So we can swing trade on an exchange, in a CEX, in a centralized exchange, or via decentralized exchange. So I can put my money, for example, on Gemini or in KuCoin or in Bybit, and buy coins today in spot and sell them 2 weeks later in spot, okay? Or I can do it the same on Uniswap and have my funds in a cold wallet and doing the transactions in MetaMask or in the Ethereum blockchain or in the Matic blockchain, okay? I'm not going in depth into this, but you need to know that this is possible in this strategy. In this strategy, we are not going to use leverage. So here we are going to use only our money. So if we have $9,000, that is what we have in this account, we are going only to use this $9,000. Also, we are not using stop loss because we are going only to buy at the lows. And you will say yes, it's very easy to say that you will buy at the lows and sell at the highs. Yes, it's easy to say and it's very difficult to do. But once you learn how to trade, once you learn the trading strategies, you will be pretty confident to hold a position even if it's losing at the beginning, but you will not lose by your stop loss. You will hold and you will sell when the level that you have, let's say, vision before opening this trade gets hit. So this requires a lot of discipline, but is for me has worked all these years that I'm trading. And yes, there are risks involved, but also here are risks involved. And always on spot trading, on my swing trading positions that are no leverage, are just buying the tokens, holding it, and selling it where the levels I have targeted will get hit. So I will not have stop loss, and I will hold the position until my levels are met or are triggered. So that's why I call it swing trading, because I don't want to get liquidated. I don't want to have a stop loss that I will sell, because if I do this capital will be at risk. And also we can put these coins or these tokens, we can talk here of liquidity on USDT or USDC. So we can have, with our swing trading strategy or swing trading positions, we can have USDT or USDC in our cold wallet or in our chains to have liquidity, or you can buy a token and hold it. You can buy BTC, you can buy ETH, you can buy DOT, okay? So these are going to be our main pairs. For example, USD BTC, USDC ETH, USDC DOT, okay? So you will hold USDC when the price is rising, you sell at the top, you hold USDC, you wait for the pullback, for the next level you see on the chart, and then buy again the asset to sell it higher if you think that or your analysis, because you need to trust your analysis, if your analysis tells you that this coin has the potential to go higher again, or is breaking supports and is going lower. So this speculative portfolio, these two strategies, let's say are I don't know how to say it, but they are complementing one to each other. So the speculative portfolio will give you the experience to trade and to fail without costing you a lot of money, because when you fail at trading and you are wrong on a trade, you lose money. But if you only risk 5% per operation with a maximum drawdown, for example, of 2% with 20x, you will lose only 2% of this 5%. So your mistakes will be cheaper than if you, for example, hold a position with $10,000, for example, leverage 20x. If you lose 2% of $10,000, leverage 20x. This is a lot of money. So that's the whole philosophy of this strategy I'm teaching you on how to approach trading in derivatives and also on spot. On spot, we need more capital because we are not leveraging. So we need more capital. And also I encourage you to, if you decide to deposit your liquidity on USDT or USDC or your tokens in an exchange, please choose an exchange that you trust, that is trustworthy, and also do the KYC, the KYC, because if something happens, you are KYC'd and you will be likely to recover your funds. Okay, and also if you don't want to trust in an exchange, you can use Ledger or Trezor and have them in your MetaMask, linked to your MetaMask, and you can execute these operations in your MetaMask with the confirmation of your hardware device. So, but you require more capital because you are not leveraging your capital. You are not increasing the purchasing power of your dollars with leverage. So, as I said, this in the right hand side, this swing trading or spot trading is meant not to speculate on lower time frames. We are going to hold positions for 1 week, 2, 4, 5, 1 week, even months here, even years if you trust on the project and you see that one project is at a very good buying point or a very good buying level. So here you are going to be, let's say, here you are willing to hold a position for even years, months, weeks, very swing trading. This is only for speculative on lower time frames. We are going to trade on the 5-minute chart here. We are going to trade on the 30-minute chart, on the 1-hour chart, on the 4-hour chart at maximum. Here we are going to trade at the 4-hour chart, 1-day chart, weekly chart, and monthly chart. Okay, this is very important. I will also type this because in the swing trading we are going to trade H4, okay, day 1 day, 1 week, and also 1 month. Okay, these are the time frames that we are going to be focusing with this trading strategy, with the spot trading. Higher time frames because we want to hold the position and we are not going to use stop loss. On the other side, on the left hand side, we are going to target the 5-minute chart, okay, the M5, also the 15M, the 30M, and also the 1H. And at maximum, sometimes for confirmation, we are going to use also, okay, you understand here. I'm not going to switch the what I just write. So these are going to be our time frames that we are going to focus with this portfolio, the speculative portfolio, because we want to take short and quick trades. We want to enter the position. Let's see if the position is right, is wrong. Let's manage our profits and our losses. If we see that we are losing, we do not have to wait till the stop loss is triggered. We can close it before it gets triggered, because this also will tell you that you are wrong before hitting the stop loss and getting all the whole loose. And also, if we see that the position is in profits, but we see that the price is starting to reverse, the price action is starting to reverse, to reverse, we can also close the position. So this will give you the discipline, this will give you the laboratory, as I said, this will give you the experience, the hours in front of the charts you need to become a successful trader in a, let's say, in a scalp position or a perpetual position, focusing on lower time frames, more speculative and leverage. And as I said, if you lose, you will lose cheap and learn fast. That's what we want. Lose cheap, lose money, and that our mistakes, we need them to be cheap, but not free, because the pain when we lose a trade will teach us a lot of knowledge that we need to become a successful trader. But in the other hand, here we will not have stop loss, and we will be focusing on higher time frames, and we are willing to wait more time. Also, one thing that is very important to have into account into this scheme or this roadmap that I just explained to you is that for this to be successful, you need to complement this with a lot of knowledge and experience. Experience and knowledge will be acquired by this, let's say, this roadmap in the left hand side, because this will give you the time required to study the trading strategies, for example, that I teach, or for example, to figure out your own trading strategies that will work for you, to find your edge in the market here and your strategy that you will be comfortable and confident using in the markets. But you will need always to know that this is a crazy market. Cryptocurrencies are, as you know, not regulated and are very speculative, are very volatile, and you need to have other other streams of income, because if you are 100% dependent on trading, you can make money, you can live off trading, it's 100% viable to do, you can do it, but you will require and you will need a lot of years of experience, of knowing yourself and your emotions when you are trading, and also knowledge like this on how to manage your capital, how to learn, how to do a little portfolio, a laboratory portfolio or an experiment portfolio that will give you the knowledge and the experience you need, and also a more longer time, a more longer view or more swing trading portfolio. If you are 100% dependent on the outcome of your trades, you will get very quickly frustrated, and every loss that you take here or even here will hurt much more. So I recommend, or I encourage you to first maybe have a job, maybe you will be freelancing, you will need to have a stream of income that will be separated from the cryptocurrency markets, okay? I am talking you as you are a beginner that is just beginning and want to begin to trade cryptocurrency. This is an advice that you will be able to implement without losing or without getting wrecked, okay? And if you have, for example, a job, the impact of the losses or the impact of the wins of these trading strategies that I'm teaching you right here will not influence your mood or your emotions as much as if you are 100% dependent of the outcome of your trades. Because if the only thing that you have in your life and as a income source or a stream of income is trading, you will get frustrated very fast, you will get anxious, you will get nervous, and you will also be likely to jump into trades that will cost you a lot of money, and also to making decisions that will be destructive for you. So first of all, find a job, find a freelancing, start a company. You need to have a base income or a base security of your necessities, and don't risk more capital that you are willing to lose, because all these $10,000 that we are putting as 100% of our capital, this is not our capital. We have another $50,000 in our bank for our medical needs, for our food, for our children, for our house, for our rent, for our car payments. Okay, you have $50,000 for you and for your basic needs and your life costs. And this $10,000, as I said at the beginning of the video, are just an heritage that your dad or your uncle or your, I don't know, has died and left you, or you win the lottery and you have a spare $10,000. Okay, you are willing to lose this $10,000, even in the spot trading account or even in the futures trading account. Okay, as I said, markets are wild. These markets are the wildest. This is not like trading stocks or indexes or forex. This is not this. This is very hardcore. Okay, before doing trading in crypto, I was doing trading on forex and also in stocks and Nasdaq, S&P 500 and also Russell. Okay, so very careful with this, because this is one of the craziest markets it's been in the whole history of humankind. So in all history of humankind, there was never a market this crazy, when you can make a lot of money quick and also lose a lot of money quick. And this little guide I just give you is one, let's say, one way of not getting wrecked very quick. And the more you trade, the more experience you get, and the more experience you get, the more you are working, the probabilities are going to work in your favor, because you are going to see clearer the price action. You're going to see clearer what levels are going to be levels to buy, to sell. Okay, the experience here is your asset. You need to know that trading is just as a developer or a programmer, as a coder that is coding on the computer. Trading is a skill. Okay, for example, your butcher that cuts the meat and sells the meat to you, it has experience, it has the ability to harvest the meat, cut them into pieces and sell it to you. Okay, a lawyer has, for example, his degree in law, and he is able to assist you when you are at court, and he has the skill to do this for you. Also a doctor. Okay, so you as a trader, you need to have the skill to trade. You are not wanting to get rich quick with trading, because this is the first mistake, and is the mistake that influencers, the mainstream media, YouTube, Twitter, and all the people are selling you. Okay, and this is not the reality. It can happen. Also, to me, happens many times that maybe you trust in a project, you open a trade, and suddenly the price goes in your favor and you have a winning trade. But this, and also at the beginning, these are the lowest probability outcomes. So you need to have experience, you need to have hours in front of the chart, what we say skin in the game. You have to acquire experience, and then when you are experienced, you will be more confident in your decisions, and this confidence will translate in more winning trades, and this will compound over time. So I will not go any deep on this video, because I don't know how much time I was talking, because I wanted to explain it to you as you are a completely beginner, and I want to give you a very simple advice to follow and not to get hurt. I know that this advice and this philosophy is not what the mainstream influencers or traders in YouTube and other social media are telling, but this is in my opinion, the correct way to do it, and the most, let's say, conservative way to do it, to not get hurt, to not lose money, and the most important thing is to learn, to acquire the skill of a trader, to acquire the emotional management, the management of your emotions when you are trading, the management of your capital, the management of risks, and also the experience of the price action, of interpreting the indicators correctly. Okay, so as I said before, follow me on Twitter on trading_soldier, and also you can visit my website trading-soldier.com, and you here can find many trading strategies to learn how to implement what I just explained you. Okay, so I hope this video helps you. I hope you find some information that you will find help you to apply to your charts and your trading strategies. And follow me, please, if you want, follow me. I will upload more videos, and maybe it will get helpful for you. Okay, so give a like, subscribe to the channel, and let's see you on the next video.